Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Wednesday, March 24th. It's 6:40 as I'm starting the video this morning. Taking a quick look at futures, large caps, ES up 0.4%, NASDAQ up 0.8%, and small caps up 0.6% after that brutal sell-off yesterday of nearly 3.7%, which saw IWM have its worst day since June of 2020, like 9 months ago. So, I mean, absolutely brutal sector rotation. Really, really tricky market out there. I'm actually going to do a trading psychology video on things you can do mentally in these choppy, tricky markets. We talked about it last night. I hosted a webinar on our trading mastermind group, and a couple of the traders were talking about just markets in general and their trading psychology. And I'm not going to get into a big spiel here because we've got to go through the charts and time is limited. If you're confused or not sure, do less or do nothing. If you do nothing, you can't get hurt. If you go off, if you're not sure what to do, which at certain times we all feel that way, step aside or do much, much less. Cut down your position size. Do less trading. If you try to go off when you're in that mental state and then act like nothing is wrong in terms of your position sizing or your activity or stuff like that, that's a recipe to get hurt. So it's never a bad time to step away if you're not sure what's going on or there's market turbulence. So kind of keep that in mind as you approach markets now. Very tricky, lots of ways to lose money. I've discovered a few in the past 2 weeks, holding on to that cyclical trade. I mean, just a day or two too long was devastating. I mean, go right on down the list. Honeywell, GM, Safe Bulk Carriers off 12% yesterday. I mean, just basically wiped out, all our gains in a couple hours. And, that's trading, but all I'm saying is lots of ways to lose money. So, as this rotation occurs, there's going to be opportunities that present themselves. So let's go through the charts and see where we're at after yesterday's trade. Here on the 2-hour chart, I dropped in a little downtrend line. You can see we had talked about yesterday, big breakdown candle, tag of the gap, bounce, and fail. Although the symmetry is off a little bit, this looks like the H sell setup. So now the key becomes yesterday's closing low. If we lose yesterday's low at 389.50, I'd expect price to come down and retag the top of the gap. So 389.50 is your pivot. As long as the bulls can hold that, they can stop the bleeding. We are up 0.4%. So we'll have a little gap open up here, 390, 390 and a half. We've got some overhead resistance at 391.50. And then we've got this downtrend line. So also we've got the PPO. Look how it came down. Remember we said, oh, this is perfect. It's curling right at the zero line. That's what you want to see as a bull. We want to get that bull cross. Well, look, it came up and gave it almost a bear kiss. And that is when the PPO line comes right up to the signal line and then rolls over. And that's where we're at right now. And RSI went from positive 50 to below 50. So that's a bearish look. We're in this short-term downtrend here. So bulls need to hold the line. And, worst case, come down here, revalidate the, this prior low down here at 388. But if you lose that, then you're looking at a gap fill. So, that 389.50 this morning and the rest of the day is going to be a key location. Here we just see it on an exploded scale. We came up yesterday and then rolled over in the afternoon and, came down here to this 389.50 where they stopped the bleeding. You can see here the gap below at 387. It's only $1 wide, but, 386 is 350 lower from here. So if that were to happen, I mean, that would be, a decent little move. So stay flexible today and, don't get locked in on a narrative. Just go level to level. If you get long here at 389.50 and the market stages a little rally, just as a tactical trader, you're going to have some resistance here at 392, 392.50. So you may want to think about covering at that point. And then if you get the breakout, then get long again for a push up to 394 and possibly 397. Qs. You can see here on the 2-hour chart that price spent a lot of time right here at 320.50, 320.5, and could not make progress, and then finally gave way and then lost this 318 area and then came down. And right here it's kind of in the middle of no man's land. I think let's look at the 30-minute chart to get some granularity on it. We almost filled this gap, like 50 cents shy. So technically, yeah, there's something up there that has yet to be filled. But I think that's the least of our concerns right at the moment. Right here this morning, we are having a good bounce, up 0.8%. But I think this 317.50 area is going to be a good pivot. If price can hold that level, yesterday's close, let's call it 317.25. If it can hold yesterday's close, I think you can be long against that, and you may get a push, back up in here towards this 321.90 area. But you lose 317, you've got a layer at 316, and then you've got this $3 or $250 gap down here at 315.21. I wouldn't be surprised if it came down here to 315 and put in a bounce on the first touch. But if you see a bounce on the first touch and then it roll over and come back to the gap, that's usually the one that will fail. So, be very tactical around this gap if price comes down here and wants to test that level. And remember, we've got this prior low down here at 310 that was, support, resistance, support, and support. So that 310 is a big level. So if we came down here at any point in the future, close this gap and lost 312, this 313, 312 band, and came down there to 310, That's a massive level. That is a massive level. And if that were to fail down the road, then you're most assuredly going to come back and test this gap at 307. But first things first, if it can hold yesterday's close, bulls have a chance of reversing it. And you could also see, if I were to put a trend line off of this low, it would come right up in there. So the bulls are thinking, just a gap fill, pull back to trend, and off we go, which may be the case. There's some FATMAAN names that look pretty interesting. Here's where the real damage was done yesterday, 3.6%. Just letting go right from the open, gap down and gap and go to the downside. Close this gap here. I will take that out on future charts. Down here in no man's land, I think you've got a support level here at 215. I've tried to mark it here. Support, resistance. So that 215 line is important. And also here at 218, right here is an important level too. Support, little bit of resistance, but you can see support. So if price were to come up and recapture this level here at 218, that would be your technical buy. Right here in no man's land, probably a little tough to do that. Actually here on the 30-minute chart, you do have a good level at 217. If 217 can hold, you can be long. And, if there's a gap up and it can recover this 219 where the prior gap was, that can be a long entry as well. And so now we're down at the bottom of this broadening, declining wedge type structure. I wouldn't be surprised if we got just a relief kickback rally up to right here. Notice the big volume over price bar right here at 222.50. Give a little kickback here, and then that will be a big toggle point, if you will, for a longer duration. If it can get through this level, then you can look forward to a gap fill and a try back up here towards the top of the broadening wedge formation up towards 228, 229. But first things first, gotta hold 217. I don't know what to tell you if 217 doesn't hold. First stop is going to be 215, and if they keep nailing it, you've got a support layer down at 209.50, 210 kind of area. But we are oversold here on the 30-minute chart. I'm looking for, just a relief rally, at least short term, just to, relieve these oversold conditions. Before we get into the FATMAAN names, if you're new to the channel, thanks for spending some time with me. If you like what you've heard so far, hit that alarm bell and subscribe button. That way you'll get all my video content. You'll be notified of it. You won't miss a thing. And check over in the show notes. You can visit the blog site. A lot of trade school stuff, a lot of trading psychology. Plus, on my daily blog, you'll get a lot of added content that's not reviewed in the videos. And you'll also get an invite to our trading room that continues to be vibrant and active with lots of trade ideas, lots of good guys and gals working hard to get better. That would be great. And hit that like button. I'd really appreciate that. That helps me on YouTube and to broaden my audience. I'd really appreciate it if you forwarded a link to somebody or a lot of somebody's in your trading circle that may benefit from the work. I put a lot of effort in on these levels. I'd like to think, most of the time they're right on the money. And if you can focus on your execution and trust me on the levels, I think you'll do really, really well. And that would, nothing more would please me than to know I helped in a small way in you making some money in the market. So let's look at Facebook. A little bit of a concerning look here. Nice uptrend. Got up here to this 300 level, was rejected, and now broke this uptrend line. I've laid the fibs on in this light blue color. You can see the 38% retrace area would bring it back to 284. But I think for today, as long as 290 holds, bulls are in good shape. If 290 were to fail and more weakness comes in, I think you're almost assuredly going to come back to this little zone here between 284 and say 283, where this 38% level is. And that would be certainly an objective long for those of you that want a second bite in the apple. Notice over here, that was a prior high. So that would be a back test of the breakout. And that's a very common technical move. So if you did get that move from 290 to 284, 283, that would be a place to get long. And if you were watching this on an intraday basis and you saw 290 fail and you got short and you got that $6 move down to 284, I would be closing that out, taking profits, and looking to reverse into this 284, 283, and then for a move back up towards 290 and towards 300. Apple, I'm still a little skeptical on it. I want to see, for a longer term, okay, the correction's over kind of move. I want to see 127 taken out with conviction. You can see here, fail, another fail. In the downtrend, a little pop out, gap here yet to fill, and trading below this 123 pivot. I mean, for me, it's simple, 123. If it's above, you can look for a gap fill up to 125. If it stays below, it's open down to this 120 spot 50 area. So a little lethargic compared to some of the others. I'd be careful with some big, long-term duration trade. There is a gap down here yet to fill down to 116. That would be, from a technical standpoint, come down here, fill this gap, test the prior low, double bottom, 116, 36, 116, 116.50, double bottom, maybe see some bullish divergence there, then go. I have a hard time thinking, this thing is just going to take off and leave this gap down here below. But, anything's possible. Tesla, for me, it's all about 670. Yesterday, kind of hovered right on that pivot level all day long. This is not some big breakdown. $10 is nothing. I'm looking for, something bigger to happen around 670. Either a continued move down towards, 630, 620, and eventually down here to 580, or to take 670 out with some conviction and come back up for a $30, $35 move up to 705. Microsoft. This was a real nice technical study and a real nice trade if you caught it. This strong move into the gap. We had a gap entry back here that failed. There was a try here at this level that also failed. Yesterday, a move back into this 238 gap was your technical buy, and you got to move right up to the top of the gap to fill that gap. And then from an active trading standpoint, that's where you close the trade because your technical objective would have been met. And then look at all the tries, all the tails with the bodies below, where price kept trying to reach up and touch, 241, kept getting rejected. That's your objective short. And then if you did that and you had the patience to do that, you got, it let go at the end of the day. So now this morning, we've got this gap from yesterday between 237 and 236. As long as it can hold 237, you're fine. If it breaks back above 238, you can buy that if it looks like it's going to be a strong day, and open up that possibility for a run back to 241. But if it loses 237, then you're going to get this gap fill, and then at the bottom of the gap would be a place to try a long, and then your 235 remains what I consider, quote, the big pivot. As long as it stays above 235, I think the bulls are in control. If it, drops below that midpoint of the big trading range, then I think bears have kind of asserted control. And if you want to, if you're an active trader, pull up Microsoft and pull up a 5-minute chart. If you do that, look at this area here. When it reached the top of 241, what you will see is a clear as day 5-minute double top at 241 with massive bearish divergence on PPO or MACD. And if you look at that, that is a money setup when you see that as an active trader, when you get that double top or double bottom with massive bearish divergence on the top or massive bullish divergence on the double bottom. Those are very high probability trades to take with a stop, just above on a double top and just below on a double bottom. So pull that up. I may end up making a video about that because it's such a common move and such a high probability trade. I wanted to bring that to your attention. Amazon, we got this move from the bottom of the box to the top of the box. This looks like a fake breakout, but if it can recapture 3150, bulls stay in charge. And using our free 50 club rules, if it can break above 3150, your target is 3200, and that would be your free 50 club move. So use 3150 as your toggle point. Google, I drew in this because it kind of jumped out at me as a bear flag. Nothing says this plays out, but if you lose 240, today, that would kind of trigger what this formation looks like. And this is the measured move down to 1970 based on this structure. I wouldn't expect that. You may end up getting it over time, but not some kind of massive move. But if you lose 2040, I would certainly think that 2010 down here to yet again test the bottom of this box would be a good T1 technical target. And if if price breaks above 2050, get long. And I would think your technical target would be 2075. So Google remains in this big choppy range. Certainly tradable, but a choppy range nonetheless. Netflix has had a very powerful 3 or 4 day move, actually 5 day move, from last week on the 19th to now. Impulsive move, flag, impulsive move, flag. I think you can stay long against 535 as long as it holds. If you get a pullback into this gap, and certainly if you get a gap fill down into 525, 522, you could put your fibs on this, and I bet you would find that the halfback long is right in here, right in this 522 area, 525 area. And I think if you got that pullback, that would be a pretty nice objective long. If this ends up being just a small bull flag and it holds 535 this morning, I think you can be long against that, with your target being up in the 555 area. And just this structure, bull flag, bull flag, bull flag, I think that's very possible. But you got a big level of resistance here. And if you had that the whole way, I would be certainly rolling up stops, rolling up strikes, because this is going to be a big level up here. Quickly wrapping up here, this DADA, I was just flipping through some charts and just wanted to point it out, not that this is, oh my God, run out and buy it. But when you see a structure like this, where for 2 weeks, everybody and their brother stepping in at 29, and the the Bears simply could not break 29. That's a good objective long, right? Now we've popped up here to 32, so there's more risk. But, if you had some kind of pullback in here to 30 or 29, that's your location to try a long with a stop just below, knowing that for all this period of time, buyers were stepping in. That's your paper cut level. If the bears step in and break this level, it's going way down. And that would make this look like a bear flag that failed. But as of now, the bulls have made themselves known at 29. And, if you see this multiple days, couple weeks, where the bears can't break it, those are usually good places to try along. As mentioned in today's blog, we've got a 5-year auction today and a 7-year auction tomorrow. Who cares? Well, the last time those maturities were at auction were a complete disaster. Foreign buyer participation were the worst on record, like in forever. And forever is a long time. So if those maturities again have disastrous auctions, you're going to see it in bond yields. So just have that on the radar screen today and tomorrow. Technically speaking, we had the bear trap, the fake breakdown below 136, and the recapture. So if you got long on the recapture, you're in good shape. Now the next technical level is a recapture of 138 and the 20 EMA. If that can happen, you can get a move to the top of the box here at 141. And if there's an extended kickback rally, you could see prices come all the way up here to the 50 at 144. And if you put the fibs on this, that looks like, somewhere between a 38% and 50% halfback. And so that would be a place, if you got that high, to most likely close out your longs, because in my view, longer term, yields are heading higher, and this, period of weakness in yields are tied to, Europe reopening disaster, oil selling off, all that kind of stuff, putting seeds of doubt in the reopening trade. But once it becomes clear that yes, we will reopen the economy, those yields are going to go right back up again. So there's going to be a time, I don't know if it's going to be at 138 or 141 or 144. There's going to be a reversal point, and you're going to want to get short because if we go towards 1.9, 2% or beyond, we're going to be way down here in the 120s, and that'll be a nice trade. Lastly, I wanted to show you this chart as a generic setup because I think you're going to be seeing a lot of them. This is the oil services ETF. Big run. Oil selling off, prices pulling back. Two things are going to happen. One, first thing that's going to happen is a back test of the breakout. If that fails, you're going to get a 50% fib, half back long entry opportunity. And so these locations are going to give traders a second bite at the apple in a uptrend. And I want you to be looking for that on your charts, on the cyclicals, on the value, on the travel, on the energy. You're going to be seeing that move all over the place. I want you to be ready for it. I want you to go into your charts, mark those levels, alarm those levels, and be ready, because this rotation is going to rotate again, just like treasury yields. When people figure out the world is not ending because Europe can't get it together, when they do get it together and everything starts reopening, all this stuff is going to reverse. Oil's going higher, copper's going higher, airlines are going higher, all that stuff, where this was a vicious rug pull, but now it's going to be coming into support, and it'll be a place where we want to get long for the recycle higher, and I think that's what's going to happen. So let's wrap it up there. Hope you guys have a good day of trading. Check out the blog. I'll have some content there on these setups and other trades that we discussed, and might fill in around the edges from the commentary here on the video. Okay, thanks for listening in today. Have a good day of trading, and talk to you next time.